Hey guys, today we're talking about the greater fool theory and how it applies to portfolios and how it applies to investing. I'm Rob Tatro and let's get right into it. The greater fool theory is the idea that during a market bubble, you can buy an asset class that may or may not have an underlying value, and you don't have to worry because there is a greater fool out there that is going to be willing to pay you more for your asset than you paid. Hence, you can make a gain based on the fact that someone else is more stupid than you. There's a greater fool out there willing to buy this overpriced asset class. This applies to pretty much every market bubble that we've seen in the last thousands of years. If you go back to tulip bulbs, if you go back to emus, if you go back to crypto, if you go back to cannabis, every one of these has had a period where there's a greater fool theory. And the greater fool theory exists, and it will happen from time to time. People will make money on an asset class that they buy on the way up in a market bubble, provided they're able to sell before that bubble bursts. Because as we know, when that market bubble bursts, all of a sudden, there are no buyers. And when there are no buyers for an asset class, you cannot get rid of whatever shares or units of that asset class that you own without taking a significant loss. And sometimes you can't even sell. Sometimes there are no bid. So when these things blow up, if you're left holding the bag, you're done. So think of a party at a house. There's a party at a house, and it's a fun party, and everyone's dancing and pouring shots, and everyone's having a great time, and everyone wants to come into the party. People are coming into the party. People are getting into the party. But what happens when there's a fire that breaks out in their party? Well, there's only one door out, and there's only a few people that are going to be able to get out. And the same thing happens. The rest of the people are going to burn up. The same thing happens with asset classes. There are very few buyers willing to buy these asset classes when the market pops, and anyone holding those assets is likely going to have significant losses. So if ever an investor tells you that they're subscribing to the greater fool theory, they believe in the greater fool theory, that's how they're going to make money, I would strongly advise against it. And here's why. First off, it's abundantly risky because you might think that tomorrow there's going to be someone else willing to buy this thing. Even though I think it's not worth that much, I still think tomorrow someone else will be able to pay for it more. Yeah. And the day after, and the day after. But the problem with bubbles is it's impossible to know when they're going to burst. You might think you've seen technical charts. You might think you know how much time is left in this market, but you never know. And when it pops and when it bursts, you don't want to be the last one into that house. You don't want to go down with the ship either. Price trends can reverse in minutes. This could happen while you're busy at work. It could happen while you're on a vacation. And if that does happen and you're not able to sell, you're done. All right. So it's incredibly risky. More importantly, and probably most importantly, if you're subscribing to the greater fool theory, that means you believe that someone else will pay more for this worthless asset than you. There's a stupider person out there. Someone is a greater fool than me. Well, let me ask you this. What happens if you're the greatest fool? What happens if you're the last one to buy this asset class? If you are the greater fool, then there is no greater fool. Those are significant losses for you. Now, how do you recognize if someone's trying to get themselves into this greater fool's theory game? Well, they're generally going to try to be getting into sectors or investments that are hot. All right, it's up. They'll say stuff like it was up 20% today, or it's up 50% last week, or something has doubled in the last few weeks. When you start hearing stuff like this, it's hot, it's sexy, I saw it on TikTok. And that is a sign that that individual might be investing in, hoping for the greater fool theory. Very, very dangerous. Now, it's been well documented that historically stocks will often revert to their mean. So if you're trying to play the greater fool theory, if you're trying to play that game, you're hoping that someone pays more for you. You're hoping that someone will buy an asset for you at a higher price than today. But we know that it's going to revert to the mean. It's likely going to revert to the mean. So that means the game is not a fun one to play. Effectively, the greater fool theory is a form of speculation. Speculation is when you're buying an asset class, hoping that somebody will pay more for a future date, much like the greater fool theory. We here at the Tatro Group, we prefer to invest. We prefer to build portfolios owning assets, real assets, alternative assets that are generating a cash flow, have a proven method of valuation, and are able to grow year in, year out with as little volatility as possible and as much return as possible. That's how we build portfolios. That's why we're award winning, and that's what we will continue to do for for you, for our clients on a regular basis. If you'd like to book a no obligation consultation to chat about this or anything else, go to www.speaktorob.com. We'd love to book that chat with you, chat about this or anything else that's on your mind. Remember, the greater fool theory is incredibly risky, incredibly speculative, and it is not recommended for long-term investors. Yes, you might make money short-term, hopping on a bandwagon, timing the buy and the sell perfectly, but wouldn't you rather own a quality asset that you know is going to appreciate over time and you're not going to have to worry about finding some fool to sell it to down the line, where you could sell it on its value, on its merit of the asset itself? Personally, that's what I prefer. Sometimes you need to be patient, folks, and impatient investors usually lose out when it comes to the stock market. Thanks for tuning in, guys. Don't forget to like, subscribe, follow, smash the bell. Give us your comments. I'd love to see them below. If you agree or disagree, put it out there. Put it down below. I'd love to hear your thoughts. Thanks for tuning in, guys. I'll see you in the next video.